am Jawad Ahmad, and today we are going to continue our class where we have left in our previous class. We have already studied three different categories of the business transactions. First was capital nature transactions, second was borrowed fund related transactions, and the third one that we have already studied is fixed asset related transactions. Now move to the fourth category of transactions, that are sales transactions. So before we can start our class and study what are the general entries relating to the sales category, please subscribe to my channel so you can get my videos on a timely basis. Have you subscribed yet or not? If not, firstly do it so we can start our class. Hope you have subscribed my channel. Now going to start our class. Here, sales transactions. What are these sales transactions? Sales basically are the income for a business that ultimately increase capital, sales. Sales are the income of a business, and the incomes will increase capital, means this is the amount that is payable to the vendor or to the owner at the end of the business. So let's start sales transactions. For example, we have sold some, we have a retailer shop, and we have sold sugar packets to customers. So what type of transactions can be taken here? First one is that sales made on cash. So here, first thing that is going to affect is the sales, business sales, and the other that is going to affect is the cash. Business sale will increase, and cash is also received from the customer at the time of sale. Therefore, the existing cash in the business drawer will also increases. Sales is an income and cash is an asset. So on one side, business income is increasing, and on other side, business assets are increasing. So recall the concept that we have already studied in our previous class. Increase in asset and expense will be debited. Increase in capital, liability, income and sale will be credited. So increase in sales will be credited. Sales income credit, and cash will be debited because it is an asset. Now move to the second example, sales made through checks. So let's think what are the two items that are affecting here, or what are the financial elements of a financial statement that are being affected here. First one is business sales, and the second one is check or bank balance. On making a sale, business sale increases and our bank balance also increases. So, sales is an income. So, an increase in income will be credited, and increase in a business asset, that is bank here, will be debited. So, the journal entry will be bank debit, sales credit. Now move to the third example. Sales made on credit. Credit means that our customer has not paid for the items that he has taken from us. He has agreed with us that he will pay for these goods or services at a future date. So the person who has taken goods or services from us and amount is receivable from him in the future, receivable funds receivable from him in future. This person is known as debtor. The person from whom our funds or amount is going to be received is called debtor. And the other thing that is affecting here is sales. Sales increases and our right to receive money in the future from the customer also increases. Debtor is our business assets. So the entry will be, say increase in sales will be credited and increase in asset will be debited. So the entry will be debtor debit, sales credit. It's the famous entry in accounting system. And whenever our debtor pay for its debt, then the entry will be cash debit, debtor credit. The right we have created from debiting asset is now reversed or cancelled or discharged by crediting an item which is already debited. So when the cash will be received from the debtor, the entry will be cash debit, debtor credit. And if the amount is received in terms of bank balance, then the entry will be bank debit, debtor credit. Check received from customer. So these are the sales related transactions. Now move to the purchase system. Purchase related transactions. purchases. So study a purchase of a sugar packet from Mr. A on cash. Expenses are the purchases actually are the expenses for a business because we have to pay for these items. So when any item is purchased, the expense of the business increases, and if it is made on the basis of cash, then the business cash will decreases. So increase in expense will be debited, decrease in asset will be credited. So the entry here will be purchases debit, cash credit. And when the purchase is made on credit from Mr. A, it means that we have purchased some items from Mr. A on credit basis that we have agreed to pay for these amount at a future date. If any amount is payable from us, payable against goods or services purchased, then we are the creditors and will need to pay to the vendor at a future date. Mr. A is our supplier or creditor to whom the amount is payable. So the entry will be business expense increases means purchases increases, creditor credit. This will be the journal entry that need to be passed in our day book. And when paid to creditor through cash, and creditor liability will decrease and business cash will also decrease. Assets are cash are our assets and liability decreases. So here the entry we are going to make is creditor debit because decrease in liability credit, increase in liability will be credit and decrease in liability will be debited and cash will credit. Now move to the next category of transactions that are expenses. For example, electricity bill paid through cash. Then two aspects of the transaction will be firstly, electricity bill expense as increased or incurred done. And the second one is that business cash decreases, that is business asset. So expenses are increasing and assets are decreasing. Increase in expense will be debited and decrease in asset will be credited. Electricity expense debit, cash credit. So move to the last transactions, that is other transactions. Cash deposited into bank. Cash is withdrawn, therefore cash decrease, which is an asset for a business, and bank balance will increase, which is also an asset. So here one asset is decreasing and other is increasing. So the journal entry here will be bank debit, cash credit. And similarly, when bank balance withdrawn and place in business drawer. So bank balance will decrease as the cash has been brought from it, and the cash in our business drawer will increase. So the entry will be cash debit, bank credit. So these are different type of business transactions that are mainly involved into a business. So let's meet in the next class so we can study or do a practical question by making a proper format of journal and posting the relevant journal entries into it. So let's meet in the next class. Thank you for your time.